Welcome to the December market commentary. I'm Maria Considine King. Simon, November was an interesting month for investors. What happened?
Yes, it was another wild ride for markets. Markets did trade lower for most of the month, but on the last 3 trading days you saw a sharp snapback, and in fact, domestic equity markets ended mostly in the black. But it does highlight what we've been talking about, and that's the expectation for some heightened volatility in markets in the near term.
As we move into year-end, consumer spending is on the increase. Is that because it's the traditional holiday season, a shift in consumer confidence, or is it something else?
Yeah, well, consumers are definitely out there and out there spending. You know, we saw Black Friday. Sales were up 6.6%. It was the highest Black Friday on record. And, you know, maybe this notion of savings fatigue or pent-up demand, that after several somewhat anemic years, consumers are just really stepping it up. And as I've heard quoted once, never underestimate the resiliency of the U.S. consumer.
At the same time, businesses seem to be exercising caution. Can you talk a little bit about that dichotomy?
Yeah, businesses are indeed very cautious, and they have a reluctance to add workers. They're not seeing this demand at the margin. So until you actually see that incremental unit of demand, or companies losing out on sales because they don't have the workers, then companies are definitely going to have a reluctance to hire. And with an economic outlook that's somewhat mixed and a regulatory environment that's a little bit in motion, you're seeing businesses reluctant to actually add workers in this environment.
Across the pond, the EU governments seem to be stabilizing their debt crisis. Can you tell us what has happened recently and what economic news we should expect to hear out of Europe in the coming weeks?
Yes, that's right. Europe was challenging, particularly in the earlier part of the month. It's challenging in the massive amounts of debt that they have. And they're trying to look at a resolution, which is both going to be monetary, but also fiscal. And it's very hard to get the fiscal policy in tune to create some workable solutions. And what you saw was Spain and Italy's debt or their borrowing costs spike over the month. With that, concerns over some liquidity issues in the banking sector. So right at the end of the month, you saw a concerted intervention to add liquidity to the market by central banks.
The U.S. equity market seemed to end November more strongly than they started. Can you tell us a little bit about what happened there?
Yes, well, on the back of this liquidity event or this intervention by central banks, markets actually rallied significantly. Over the last 3 trading days, markets traded up between 7 and 8%, as represented by the Dow Jones and the S&P 500.
And is there anything in particular that investors should be paying attention to as they go into year-end?
Well, year-end is a great time to do some housekeeping. It's a time when you can lock in some tax losses so that they'll help you out in April. It's also a great time to work with your advisor to do a portfolio tune-up potentially, maybe make some slight adjustments to put your portfolio in line with your long-term plans. And that way, when you wake up next year in January, some of this housekeeping is out of the way.
Thank you, Simon.
Thank you, Maria.
And thank you for joining us. Please join us in January for our next Market Thoughts video.